Aaron, what is tax loss harvesting?
So tax loss harvesting is a very important wealth management strategy that should be considered in any taxable investment account or investment portfolio to attempt to improve the tax efficiency of your portfolio and defer capital gains taxes into future years. The basic concept is that throughout the year you're triggering realized gains, and as the positions in the portfolio disperse, there's going to be positions that are in stocks that are trading below what you paid for them. So the process of tax loss harvesting involves reviewing those positions, trying to identify positions that can trigger a loss, and then replacing those positions simultaneously with securities that have a similar market exposure. Typically you use exchange traded funds. Then you wait the superficial loss period, which is a 30-day period, to ensure that realized loss qualifies, and then you revert back to the original positions at a lower cost base.
And when should I engage in this strategy?
So typically, tax loss harvesting happens in the last couple of months in the tax year. So for an individual, that would be in November or December. For a corporation, you need to coordinate this with the fiscal year end of that specific corporation to ensure that you are maximizing that. However, one of the misconceptions around tax loss harvesting is that it has to happen at the end of the year. Occasionally, throughout the year, we have a market sell-off because of negative news that occurs in the economy. And in such a circumstance, you may want to engage in tax loss harvesting mid-year to capture some of those securities that have dispersed to the downside, and you maintain obviously the original market exposure, but you're capturing that sort of windfall tax loss harvesting opportunity.
What technology is required for this strategy?
So technically there's no special technology required for tax loss harvesting. If you have an investment account or a trading account that you can execute trades on, you can manually review the entire portfolio and identify those positions on your own. However, that can be somewhat of a tedious process, and if it's done manually, often it just doesn't happen. In our firm, we have unified managed account technology where we can systematically identify tax loss harvesting opportunities and follow a specific process that is rules-based and automatically replace those securities with the appropriate ETFs and then unwind the tax loss harvesting strategy after the 30-day period. The advantage of having a systematic process is that it can become a standardized part of your wealth management approach, and that is critical to achieving tax efficiency in your investment portfolio.